Well, howdy there, folks. This is going just perfect. And I mean, it couldn't pretty much be going better than it's going right now. And in this video at the top here, I want to take you guys through exactly what's going on here. And I want to show you how this market's reacting. And I want to show you kind of some historical markets and how perfect this market's reacting so far in 2023, especially after a day like today, okay? We're going to also, after we get through that, we're going to talk about Tesla stock, big move down today. We'll talk about that. We'll talk about Shopify, big move down for Shopify today. Obviously, the Fed made some big comments that I have to comment on, and we got to talk about that because that could obviously change the trajectory of the market in general, and a few other subjects I want to talk about today and show you today that are very, very important. So first off, I appreciate every single person that subscribed to the channel. Thanks for being here, folks. Hope you always get good value out of these videos. I always got a lot to show you guys, and I appreciate you being here. And also, it's less than 24 hours from me making my next moves in the Patreon portfolio. If you want access to see the stocks I'm buying tomorrow, check out the pinned comment down there. You can support the channel, plus get access every single week to see the stocks I'm buying and selling. It is a no-brainer to be part of that. That will be pinned comment down there, okay? So first off, market today, Dow is down 1.26%, S&P 500 down about 1.4%. NASDAQ took a big hit today, about 1.8% there, and the Russell was down less than 1%. So the Russell was the winner today. It went down the least, okay? This was kind of a perfect move down. You know, if I take you back to just a beautiful market to be in, okay? Which is a market I participated in 2009 through 2019, okay? This is an unbelievable market. The two reasons this was such a beautiful market to participate in is, one, obviously you were coming off these insane lows, right? Now, I didn't have crap for money back here, so I didn't really get to take advantage as much as, other folks might have back in those days, right? But it was a beautiful market because it was starting off very low, right? You were coming out of the great financial crisis. But the second reason that market was so beautiful is you would get these normalized pullbacks here and there as the market ticked along year after year after year. And sometimes these pullbacks would be a few trading days, sometimes they'd be a few weeks, sometimes they'd even be a few months. But it was very normal activity. There wasn't usually some epic move down that was like, oh my gosh, the market just crashed 30%. That usually didn't happen. You had very normalized market, okay? And you would make these big, nice upward moves and where the market would move up 5-10%, and then it would give back a few percent, right? And everybody kind of get a little cautious again. Then it move up another 5-10%. Then it would get, everybody would get a little cautious again. Market would move down a few percent. And so every time it moved down, ultimately it just meant buy the dip, buy the dip, buy the dip over and over and over again, okay? And if you weren't buying the dip, you got left behind. What I want to show you here is very, very important for everybody watching this video right now to understand this, okay? You have to understand this. I know there's probably a lot of people that haven't been in the market for, the last 15 years like I have. This last 5 years is messy, okay? This is not a good market. This is a messy, disastrous market. Super insane, okay? You're getting these just epic moves down, epic moves up, epic moves down again. This is a mess, okay? This last 5 years has been an absolute mess. That's what the best thing I can say. And why has it gotten so messy, okay? Well, you've had a lot of geopolitical tensions over the past 5 years that have ramped up, right? Obviously, Rona screwed up everything. You had the Fed obviously pump money out there like crazy, right? As well as the other government agencies, federal side, state side, right? Then you obviously had to deal with inflation in an epic way. You had to deal with company earnings that were looking great, then looking horrible, then looking great, then looking horrible, right? And so it's been a messy 5 years. It absolutely has. This is not the prettiest market, right? It's not. This has just been quite a mess. And in this time period, you've gotten these just kind of insane moves up, insane moves down. And, a day like today is a very normalish move. To see the indexes go down 1%, pull back like that, that's a normalish move. That's almost more of a bull market type move. Now, if today was one of those days, right, where the markets, the indexes were down 3+%, that would show me that, oh boy, this is definitely, we're in this still kind of messy kind of bear market territory. The fact that you have a normalized pullback today of about 1% or so, right, that's normal. These 1 to 2% moves are normal. When you're talking about 3, 4, 5% moves, that's when you're in an unnatural crashing market or bear market territory nonetheless, okay? Now, if we look at the market just basically since about the end of 2022, the beginning of this year, right? This is bull market activity here, right? You're getting these nice kind of moves upward, then you'll get a little pullback. Nice move upward, you'll get a pullback. Nice move upward, you'll get a pullback. Nice move upward, you get a pullback. Nice move upward, you get a pullback, right? This is more of what you expect in kind of more bull market territory. Now, we're not out of the woods in terms of like, this is the next 10-year bull cycle has started. But I can just tell you, if you look at the pricing activity and how the market's running, it's running much more of like what you would like to see in a bull market, where you get a nice move up, and then you get a pullback. A nice move up, you get a pullback. And so just keep in mind, this is definitely, if you're on the bullish side, this is something you want to see out there in the market, okay? Now, we got the opposite last year, okay? The opposite. And this was one of those markets where you get these little nice moves up, and then you just get an epic move down, nice move up, and an epic move down, right? And the moves down were just absolutely extraordinary. And so it felt very different, and the pricing activity in that market was very, very different than obviously you're kind of getting in this market, right? And I think that's just, this is a good example of this. This was like up in a straight line, right? With almost no pullbacks along that ride. That's kind of one of those scary upward moves where it just feels like you're on a roller coaster about to go down, right? And boy, did we get hit after that. That was just an absolutely epic move down. So the way this market's reacting now is about as perfect as you can possibly get it in the way it's starting to react now at this point in time, okay? Shopify. Shopify made a huge move down today. A lot of people want to know, is a stock a buy? Is it not a buy? In regards to that, okay? Here's my opinion on Shopify. Is a stock a buy? Is a stock not a buy, right? This stock is absolutely a buy if you're a long-term investor, that is, right? And you have time to play out here. If you're worried about where the stock price goes over the next 1 month or 3 months, I don't know. I have no clue where the stock's going over the next 1 to 3 months. But over the next 1 to 3 years, I'm very confident this stock has a long runway ahead. Over the next 5-10 years, oh my gosh, okay? And so I posted this inside the private stock group, right? In the private wealth group. I posted this up, by the way. If you're interested in applying to join my private wealth group and my private stock group, check out the description area. There'll be an application down there, okay? So I just got off the Shopify conference call. Hard not to listen to that call and get very excited about the long-term future. So many growth levers, it's disgusting. And yes, this company has among the most growth levers of just about any public company I know of, other than maybe Amazon. I think Amazon might be the only company I know of that has more growth levers than Shopify. It almost feels like Shopify's baby Amazon, just they run their business differently, okay? They're also going to finally go up on price on their main offering this spring, which they almost haven't done ever since the company's been around. The financials are a mess. Great revenue growth and great gross profit growth. And if you look at their financials, those are phenomenal, right? Expenses and bottom line are a mess. They had a big acquisition go through this year for a company named Deliver. They also had to cut 10% of their staff in late summer. From my understanding, Shopify did one of the most generous layoff packages ever for those employees, so it must have hurt the current quarter numbers in a major way. 2023 should reveal more of a reality moving forward on expenses and bottom line. Toby, the founder, he sounded like he was very focused on profitability moving forward, almost Zuckerberg-ish, in terms of Zuckerberg in the last conference call kept bringing up efficiency, profitability, running the company smaller but in a more efficient manner moving forward and moving even faster and more profitable. And Toby kind of sounded, not to quite the extreme that Zuckerberg did, but definitely sounds like that's where he's taken Shopify and wants to build them into a profit machine, a cash flow machine, right? Which is definitely a huge potential for Shopify over this next few years. So overall, Shopify is definitely a very exciting stock. Their financials are messy right now. And that's what's causing, I think, a lot of confusion in regards to Shopify. And, once their financials will likely get cleaner in terms of what their expenses are moving forward, that bottom line, I think that's when the stock will make its next big move upward. It's just a lot of people are kind of like waiting for this kind of like, what's the reality here? What's the expense line items moving forward? What's this bottom line looking out like moving forward? You got the great revenue growth, even in a tough environment. You got great gross profit growth, even in a very tough environment, right? Numbers are very, very strong in regards to that. But after you leave that gross profit line item and you start going through here, it's messy, okay? And so that's basically what has to happen there. But for a long-term investor, just understand they'll figure it out. They will figure it out. There's a lot of small cap companies that sometimes they don't figure it out. Company like Shopify, they will figure it out, okay? Good old Tesla Tesla had a 5% plus pullback here today, okay? And I think the stock ended at 201. The stock ended at 201 here today. Okay. First off, some bears out there celebrating here today, and the first thing I would say about that is, what are you celebrating for? Like, the stock is still basically doubled up, doubled up in like the last month and a half. So, I mean, I guess if that's a celebration that the stock went down 5.5%, I guess go celebrate. But yeah, don't forget the stock has basically doubled up since then, right? Now, what happened here today? Why did this stock actually decline and decline significantly? Okay, one reason obviously is just like it needs to pull back. Like, stocks don't move up in a straight line. Eventually, you're gonna have a reason to pull back. But this happened today, okay? And this scared a lot of people. This is what happened. Well, Tesla recalls 362,000 vehicles. That sounds like a lot, right? Now, whenever you hear an automaker recalls 362,000 vehicles, okay, what everybody thinks immediately is, oh my gosh, this is going to cause a company to lose a ton of money. Because they picture like, oh, they're going to have to take in all these Teslas to service centers and they're going to have to get fixed and something like this, right? And so everybody kind of freaks out momentarily because that's traditionally how it worked. Like, if you had some sort of recall, you had to take your vehicle into the dealership. It was a big cost to the companies. Dealerships actually probably loved it because they got to make profit off that. But in terms of the automakers, they got screwed. Well, check this out, okay? We'll look a little deeper, right? Tesla will deliver an over-the-air software update to the cars to address the issue. That's the beautiful thing about Tesla, right? Just do an over-the-air update and, our issue will be fixed. Beautiful, okay, absolutely beautiful, and that's just, I don't think that's something that's looked out there enough. At the end of the day, I think something like this is seen by the algos, and it says, like, Tesla recalls 362,000 vehicles, and so the algos freak out, and, stock sells off, obviously big. But like I said, at this point in time, Tesla's run so much, I think the stock's almost looking for any reason to do a pullback at this point in time, okay? Google McDougal, since they had their AI day, the stock's been a disaster, right? Down 11+% just since they did their AI day last week, right? Now, there's some news that happened in regards to Google that, maybe just adding on to the pile-on effect of negative news around the stock. And this news is YouTube CEO Susan, I can never pronounce her name right, or her last name right, so I do apologize, says she's stepping down. YouTube CEO Susan said Thursday that she's stepping down. And basically, Neil, the chief product officer, will take lead as senior vice president and new head of YouTube. Now, Susan's somebody that definitely got some hate over the years. But I mean, to be frank, this is a hard platform to run. YouTube is massive. There's so many things going on with YouTube. Like, I'd love to see anybody take her job and try to do a better job. It is ridiculous, okay? I think people think it's just some easy game or something like that to be the CEO of YouTube, this massive thing with, millions of hours of content just constantly being uploaded to the site, right? It's a very, very difficult job, and I respect her for what she's done here, okay? And she, at the end of the day, she's an A-plus player, okay? Susan held long-held ties to Google founders Larry Page and Sergey Brin, who she let work out of her California home, okay, upon founding Google. Page and Brin rented out the garage space for $1,700 a month from her. How crazy is that? Okay, Susan at that time was working in the marketing department of Intel. Okay, this is like back in I guess I think they would be late 90s, early 2000s was the time they were likely renting that garage space for. Right, crazy. In 2006, she advocated for the $1.65 billion acquisition of YouTube, which was genius. That was one of the best acquisitions, if not the best acquisition any company's ever done in history. The only thing I can think that's on that level was when Facebook bought Instagram for, I think it was around $1 billion. That was an ingenious acquisition. So she was, key to that move, and that was brilliant, man, absolutely brilliant. Susan joined Google in 1999 and oversaw the design and build of Google's advertising and analytics products for 14 years. In recent years, YouTube expanded their physical footprint. During her tenure, she oversaw the company's rapid expansion to become the largest video platform in the world. YouTube has now more than 2.5 billion monthly active users, and more than 500 hours of content are uploaded to the platform every minute, okay? Like I said, that's a hard job. So she's an A-plus player. And I got to say, I respect everything that she's done at YouTube over time. I can say definitely YouTube changed my life, okay? If you want to see how much money I've made since 2016 from YouTube, I'm going to show you right here, okay, on the main channel. Check this out, okay? $1.57 million in lifetime earnings. Now, obviously, you have to divide that out. I've been doing YouTube basically kind of full time since 2016, right? I quit my real estate marketing company at the beginning of 2018 and let that company go and just sent all my customers an email that I was just going full time on YouTube. But basically, how I was doing this since 2016, 2017 is I was working my like full time my real estate marketing company and full time YouTube since basically 2016, right? So you can obviously divide out those numbers, but there's no doubt, like that's way more money than I was making at Quick Trip back in the day, right? And so I'm extremely, extremely thankful for, what a value hopefully I've been able to give to the audience since 2016 and all the teachings and, all the life lessons and all those sorts of things, right? And I'm very fortunate for what YouTube's provided me back. So, I have nothing but positive things to say. And I can say the world is a lot better place with YouTube than without YouTube. I can 100% say that. The amount of things I've been able to learn from YouTube over time, whether it be something simple like fixing something around the house or something like that, right? To more complicated subjects, whether it be, real estate investing or understanding more out there concepts or, one of the best places I learned back when I was first getting in the stock market, right? 2008, 2009, and into 2010, is I would watch a ton of Warren Buffett interviews back then that people would upload on YouTube. There was no big finance YouTubers like me back then, right? So I just had to watch these old interviews of like Warren Buffett and other folks like that. And I can tell you those helped out immensely in my learnings, right? I mean, I would listen to even people would upload like Warren Buffett speeches that he would do at colleges, even back in the 90s, the early 2000s. Those things were so freaking helpful. I mean, incredibly helpful to me just understanding how Warren Buffett views money, the money game, smart moves to make, right? And just understanding the stock market on a deeper level and his philosophies around long-term investing, right? And then I just took things and adapted it and made it kind of my own philosophy on how I view things, right? And, I can tell you, if it wasn't for YouTube, I don't know if I would have gotten as much into the stock market as I did. I'll just be completely honest. I don't know. You can't play life out a separate way, right? And say, okay, if this didn't happen, did this happen, right? I don't know. One of the things that gave me great confidence was when I came across Warren Buffett. And I think I might have come across him on a CNBC something they showed one time with him. And then I started going to YouTube and finding out more Warren Buffett stuff. And I just ate up anything Warren Buffett related back in those days, okay? Then I came across Peter Lynch over time. Peter Lynch was such a great teacher. Oh my gosh, okay? And so I can confidently say YouTube changed my life in multiple ways for the better. And so, to Susan, I say happy retirement and thank you for all the service you did. You get some hate along the way, but I can tell you, you and YouTube has done a whole lot more good for this world than bad. I can 100% say that, okay? Now, in terms of who's done more good or bad in this world? Goldman Sachs, okay? No, just kidding. So Goldman Sachs, they're talking about worsening economic data puts pressure on longer duration growth sectors, right? And so this is funny, right? A slew of economic data Thursday seems to be bringing back recession fears among investors, including a decline in the Philly Fed index, poor momentum in the U.S. housing market, which probably is going to continue on, right? Higher than expected PPI, and stronger than anticipated retail sales, right? This is a comical situation, right? Because if these economic indicators come out bad, right, they come out weak, then everybody says, oh my gosh, the economy is going into a hard landing, right? But then if these economic indicators come in good, then everybody says, oh my gosh, the Fed's going to have to raise rates to 1,000,000%. So we're all screwed. So we're going to get a hard landing. So it's funny to kind of see how Wall Street's, their perspective on this, I guess you could say, because it seems like it just depends on if you want to look at the glass half full, you look at the glass half full. And if you want to look at it half empty, you look at it half empty. And what I'm finding is the bears, they look at it half empty, right? The economy's numbers are coming in great. They say the Fed's just going to keep raising rates. We're all screwed. Inflation's going to stay sky high, which is going to mean the market has to go massively lower, right? And if the economy, is bad, then they say, look, we're getting a hard landing. We're going to get a huge epic recession. And bulls can look at it the other way, right? And so it's just funny to see how the bears look at it always glass half empty, and the bulls always look at it glass half full. But anyways, man, I just thought that was pretty interesting. Now, this is important, okay? Fed's James Bullard sees a possible half-point rate hike ahead. He says, quote, I was an advocate for a 50 basis point hike, and I argued that we should get to the level of rates where the committee viewed as sufficiently restrictive as soon as we could, he said, okay? In part, due to the front-loaded Fed policy during 2022, market-based measures of inflation expectations are now relatively low. Continued policy rate increases can help lock in disinflationary trend during 2023, even with ongoing growth in strong labor markets by keeping inflation expectations low, he added. These factors may combine to make 2023 a disinflationary year, okay? So first, it's interesting he's even considering, right, about a half a point move potentially in the future, right? But I do think it's interesting that we're at a point in the market now where people are at least considering a 50 basis point move next time, and we'll see if they do that. But it also sounds a little bit to me like he's talking a little bit more in the past, right? And he's also completely on the disinflationary trend, right? So that's going to frustrate a lot of bears because a lot of bears don't want them talking anything about disinflationary right now. So that's interesting to kind of see him kind of double down on what Powell's been talking about, disinflationary trend, which is kind of what you're seeing play out, right? Yeah, inflation's not down, but it doesn't come down overnight. No different than when inflation's happening, it doesn't go to 9-10% overnight. It takes a while to get there, okay? And so now people want somehow us to go from 9 to 2 in a matter of like a couple months. It's like, it takes a while. Like that's a 6, 12, 18-month trend to get back to that place, okay? And so it can absolutely happen, and we're on the way, right? And as I've gone over many times, those price increases that happen, those aren't sustainable. And so we're headed back there, man. It's just people get impatient with this stuff. They want it to happen overnight. It doesn't happen overnight, okay? So I thought those comments were big. You know, people are at least considering a 50 basis point rise next time the Fed goes, and I think that's good that they're at least considering it. I'd rather have people considering it, talking about it, than not talking about it, and we do get a 50 basis point move and everybody's absolutely in shock and awe type situation, okay? At the end of the day, 25 basis points, 50 basis points at this point in time doesn't make a big difference. Back when they first started raising, it's a whole different situation, okay? Now, personal savings rate. This has obviously been talked about a lot recently, and I actually even heard, I think it was Liz Young of SoFi, she was speaking about this recently, okay? And you know, so something encouraging is the savings rate has started recovering, okay? We have 2 months of things moving in the right direction. That's a positive development in regards to this, okay? Now, keep in mind, these numbers are still extremely low, extremely low, okay, in terms of personal savings. But the fact that we might have troughed, we don't want to celebrate, we don't want to pop the champagne bottles too yet, okay? But we might have troughed recently. This is an encouraging sign because this is something that gives a lot of people a lot of fear. When you see savings rate go to the lowest we've seen basically in the history of this, right? That concerns a lot of folks, and I understand, and it should concern you, right? So the fact that we're hopefully trending up now, you know, as long as inflation continues to come down, wages maybe go up a little bit, we're going to be in a situation where the consumer is going to be stronger. They'll be able to build back some savings, and that's going to be a healthy thing for the economy, for folks in general, okay? And so, you know, I don't know if everybody expected this to just go down for indefinitely, but at some point in time, things will get better, right? And that's just how the economy works, right? And so that's something good. I just think a lot of people were caught off guard by inflation last year. Everybody was. The market was. People were. I mean, no one was expecting to all of a sudden have to spend 10, 20% more every time you go to the grocery store, 30% more, whatever, right, than you were spending before. I mean, that was pretty shocking. And it depleted people's savings in a huge epic way, okay? But things are starting to reverse 2 months in a row. Let's hope a third month and a fourth month. That would be great. Something I want to point out to you guys that's amazing, right, is for the first time really in my adult life, right, which my adult life started in 2008, for the first time in my adult life, like you can get a decent return on your emergency money, right? Your socked away money that's kind of like the untouchable money, which everybody should have a certain amount of money that's untouchable money, right? And I was looking at like Ally, for instance, right? A CD account, you know, let's say you got some emergency locked up money that you're like, this is no touch money. I don't invest this money. This is for a rainy day, right? And you lock up that money with Ally for 5 years, government backed, right? It's government backed always up to $250,000, if I recall, right? FDIC. I mean, you know, that's $46,000 in earnings over the course of that 5 years. It's not bad. It's not bad at all, okay? So I do think this is an interesting time period that we're going through because it's actually the first time basically in the last 15 plus years where you could actually make a little bit on your money, okay? It's not all the money in the world, but first, money that's just socked away, untouchable money for a rainy day, That's good, okay? That's really, really good. Now, these big banks are still a joke. Look at this. Bank of America, Chase. I bank with Chase. I also have Chase stock. And I got to say, they're a joke when it comes to any of their savings products, CDs, complete embarrassment, man. Like, Twitter, can you guys get mad about this? Like, seriously, like Twitter, if you guys want something to get mad about, point this out, please, okay? Quit talking about whatever you guys spend all day talking about on Twitter, okay? And start talking about how Chase gives 0.01% yield. Like, come on, man. There's no reason for that. There's no reason for that. Chase is the biggest bank out there. Like, give me a break, man. That's just ridiculous. So, nonetheless, this is actually an interesting time to make money on your money. And, for that money that is untouchable, right? So, just something I think is important. Now, the last subject I want to speak about today, and I think it's an important subject, because the bears have been threatening us, right? The bears have been threatening us big time. And they basically been saying, and I hear these folks, okay? They're saying, just wait. Just wait. Market's going down. S&P 3200, it's coming, baby. 3400, 3600, whatever, right? We're going back down. This is just a bear market rally. Whatever they've been saying, okay? And they keep threatening us longs with this sort of talk, right? But what they'll never understand about us longs, we don't care. We welcome that. Send it down to 3,200. I don't care. This just gives us a better buying opportunity. We're not like them in terms of like we need to see our accounts at an all-time high every day, right? Which if you're a bear and you're a short seller, you probably see your account at an all-time low every day. So it doesn't really matter, right? Those folks get so caught up in these short-term moves and like you have to win or lose today. And for us longs are like, dude, they think that scares us. They think, just wait, Meta's $170 is going back to $120. They think that scares us. Like, send it back there. I would rather have Meta go back down to 120 over this next few months and be at 170. It means nothing to me. Send Tesla back down to $101. Please do it. Do it. You think that's threatening us? You think that's a threat? You think that's a threat? Quit playing. It's not a threat. That's like our ideal situation. The only people that's a threat to is people that are on short-term trades, as in options trades, okay? And they need stocks to be certain prices by certain dates. And like, crap, I need this stock, and that's a very stressful life to live, right? Or people on margin. They're super heavy margin, and they need the market to only keep going up. For most of us longs, that's not us. We're just buying these stocks and throwing them in the filing cabinet for the next 3, 5, 7 years. So, if these bears think they're threatening us, this is not a threat. Send it down. We don't care. It just gives us better buying opportunities. For us longs, we're in a position where we're ready to buy either every week, right? Like I do in the Patreon portfolio, for instance. By the way, if you want to see the moves I'm making tomorrow, check that out. That's going to be the pinned comment down there, right? I make moves every single week in that account, right? And if you're not in a position where you can buy every single week, you can at least buy every single month as long as your income's more than expenses. So if we're always in the buying position, we're not retiring tomorrow. It's not like we need the money tomorrow. It's not like for my ego, I need my account at an all-time high tomorrow for my ego. No, send it down. I don't care. Like for us, it doesn't matter. We win either way. A stock market goes up, our positions obviously increase dramatically, we make a ton of money. Great. Stock market goes down in the short term. Great. We get to buy assets for very cheap prices and continue to add to those assets over a period of time. So, that whole threatening stuff of like, you just wait, it's going to go down, man. We don't care. We don't care. Send it down, okay? That's us. We got a different mentality in this, okay? So I would say that. I appreciate everybody joining me in today's video. Thank you so much. Thanks for being subscribed, as always. And once again, Patreon, tomorrow's the big day, making new buys in there if you want access to see those, as well as support the channel. It's a no-brainer. It's like $2.50 a week to be part of that. See how I build up the portfolio. It is a no-brainer. Check that out. The pinned comment down there. Appreciate everybody, as always, and have a great day.